Time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at Likefolio. Happy Friday, Megan.
Happy Friday, guys. Thanks for having me.
All right, so we're talking Amazon. It was having a decent week until about 9 a.m. Chicago time today when the market kind of rolled over here. What kind of data are you guys seeing? Because, I'm hearing a lot of analyst calls that this is, it's getting too cheap. They've had great earnings. Their growth is still there, but they still rely on the consumer quite a bit on the e-commerce side.
Yeah, so this is actually a very interesting time if you look at Amazon from an e-commerce perspective, at least in our world, because Amazon is having a spring sale right now. I think that this is this is funny because Amazon's able to spin up these shopping holidays basically on demand because it has such a massive swath of users. And when we look at this year versus last year, we see a pretty significant uptick in consumer interest. And I think that this is really important for Amazon because prior to this event, we saw Amazon struggling a bit to gain traction in the first quarter. We did see a bit of a pullback in consumer spending, and we're starting to see a little bit of rejuvenated interest that could help to kind of prop up, especially as Amazon caps off this quarter at the end, I think March 31st, so just in a few days, which is right when the sale ends. And so this is very timely for Amazon, and this is something that when we look at retailers across the board, I think that there's a lot of uncertainty related to consumer spending. We've seen a lot of, especially, middle class and lower class consumers just having a difficult time keeping up with the rates of spending that they previously were. And obviously, this is something that could impact Amazon. So good to see this sale kind of pulling some sales into the end of this quarter, but just near term at a higher scale narrative, a little bit of consumer weakness on our front.
Megan, just looking at the web visits on the 90-day moving average here, it looks like we probably will see a slump going into the summer. Do you think that that's going to, one, actually have a meaningful impact on the company's sales, or do you see a little bit of a counter trend where Amazon continues to take market share from some of these other companies like a Target? It seems like they've been doing a really good job with providing a lot of programs and offers that really undercuts Target's ability to sell. So do you see more market share being taken away from maybe some of the other competitors into Amazon? And then also the summer sale season post-spring, do you think that that's going to also have an impact on this company's performance?
Yeah, so whenever you look at our web visits on a 90-day moving average, we're just slightly positive. We're up about 1%. So still some growth here there, but pretty flat on the year. Meanwhile, with Target, we have seen a bit of struggling. We've seen a little bit of consumer, at least sentiment backlash. It's become a more politicized name. Amazon appears a bit more resilient in that matter. And as it is e-commerce facing, it's a little bit more private of what consumers can spend and how they can shop. And I think these web visits are pretty reflective that it still is very resilient in the big scheme of things. But just in terms of that growth, we have seen just a little bit of a loss of momentum from what you saw if you're looking at last year. If you're looking at 2024 versus 2023, you can see a bit of a slowdown there. So I think that for us, its Prime membership is really insulating. We don't see signs of cancellation. We see that as a sticking point for many consumers. And, Amazon is working to improve that experience. Whenever you look at its same-day delivery service that's kind of baked into that Prime membership, it now serves, I think, over 140 metro areas. So a lot of consumers are touting its speed and convenience that, kind of comes baked into that Prime price. And you get other benefits as well. It's also working to make it search better. And we're starting to see consumers say, it's easier for me to find things. Amazon is doing a better job of, placing the right items for consumers that they're looking for, which is certainly helpful long term. So when we look at a name like an Amazon, we do see a high sentiment reading, and this is something that has improved. Its execution has improved on the consumer front. So long term, I think this is a best of breed name. It's certainly the leader in e-commerce. So although while we do have a bit of uncertainty right now, with the stock, I think it's 20% off February highs. This is starting to look appealing on our front in terms of, a buying opportunity.
And they're rolling out more functionality. You mentioned the Prime membership. That's, I think, one of the keys. It's just like Costco, right, Megan? Does your data reflect that like cancellation rates are, at the lower end as far as subscriptions for retailers like this, that, you're just not going to give up your Prime membership?
yeah, I think that it's become really sticky. Consumers have become really accustomed to being able to order what they need. And, this ranges from, big purchases, whether you're purchasing a gift, but also those everyday essentials. The other day I had to get a same day delivery of dog food for my dog because I didn't forgot to stop by the store. And so I think that convenience is really hard to give up. And that helps insulate names like Amazon and names like Costco long term, and especially helps whenever consumers have a good experience shopping with the company, which we increasingly see for both of those names.
Yep, bear market territory as of right now, down 20% from those all-time highs that we saw just about a month and a half ago. All right, great stuff, great data. As always, Megan, have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, VP of Research at Likefolio.